Bitcoin has dropped by over 3.6% since Sunday evening, going down into a new lower low on the 1 hour time frame, breaking its previous bullish structure. I'm going to be going through my technical analysis on the 1 hour, 1 day and 1 week's time frames, sharing my thoughts and opinions as to where I think BTC is heading next. As I get into today's video, if you do find it useful and informative, smash that like button. If you're new to the channel, subscribe, and let's jump right down into the charts. Take a look at what's going on with Bitcoin here. So as I said, this is Bitcoin paired up with USDT on the 1 hour Binance chart. We did break up into a higher high at $65,000 exactly just up here on Sunday evening. Yesterday, I thought we had the chance to find this previous area and turn it into a support level. And therefore, we were thinking about the idea of potentially going long. Just in here, targeting out that targeted range with the kind of stop loss lower than the previous swing low. That, of course, would have invalidated straight out the gate. And we can see that there's a lot of volatility in here. Okay, so this is the importance of making sure that you have a nice tight stop loss and not over leveraging yourself in any way, shape or form. As I say, many times, we can lose the majority of our trades and still be profitable if we apply proper risk management. Okay, obviously we still have a track record of approximately 80% success rate, so it's not the end of the world when the occasional one does get stopped down. Now with this, we can see that we have had a bit of a move to the downside, and this move to the downside has overlapping candlesticks. So we are in a kind of really interesting and peculiar area for BTC, because what I would like to be able to kind of say is that we have some kind of irregular flat going on where we have this kind of pattern here playing out, but I don't think that's really what's going on, not without some kind of contraction occurring within that kind of fifth wave move, and it's kind of irregular for that to kind of be happening. It would look something to this effect. I'm going to go ahead and draw this on approximately so you guys can see. This is a falling wedge. It is a bullish pattern in itself, but in itself, it's just a bit irregular for where it sits in the price action. So we will be looking for a break up from here. Okay, this falling wedge is bullish, so we are looking for a breakout to the upside on the 1 hour time frame. It's just one of those things where it's very irregular in the way that things have moved. So we can call it manipulation, we can call it various different things, liquidity hunting and all that kind of stuff. Ultimately, we were tracking a 3-wave move to the upside here, which we were hoping would be some kind of diagonal structured point to the upside. But looking at this now, it doesn't look to be the case at all, unless we have some kind of contracted move in here. Support hopefully will still be found on that 200 hourly EMA, currently coming in at $62,143. I don't think that's going to be a major issue, but we are finding resistance on the 50 EMA, the blue line, and 50 SMA, the yellow line, coming through this 1 hour chart. Let's throw on some smart money concepts and take a look at what's going on there. So obviously we were talking about fair value gaps. We've already filled out the one that we saw previously, and we can see that there is this deeper one coming in towards 61,800. This fair value gap is created from large buy orders where there's not a sufficient amount of selling pressure. So essentially what I mean is there's a pocket of liquidity, basically no liquidity in this range, or limited liquidity in this range, that price has to go and find sellers by pushing upwards. It creates these gaps, and these gaps historically do have a habit of getting filled out. It's not 100%, but it is something that we can kind of see time and time again. Smart money concepts is still bullish. We haven't changed into a bearish structure. So we are still looking at this through bullish lens and still looking for that potential for a move to the upside. That has not changed. So everything's still looking okay from that kind of point of view. We're just calling off quite a bit here, a bit more aggressively than maybe we were initially anticipating. Taking a look at the kind of structures here, it's very irregular, but I'm not too concerned because we do have overlapping candlesticks and that falling wedge, which is indicating that we are likely to see a reversal. So how would I now be looking to trade this? Well, taking a look at our stochastic RSIs, it does show that momentum is all over the place. Okay, I'm looking for us to come down towards our 200 EMA. It might take a little while to get there, maybe a day or so, but that's what I'm going to be looking for, and I'm going to be looking to go long here on the 200 EMA. I'll put a tight stop loss lower than the previous swing low once we get confirmed that we are finding support on that 200 EMA, and we'll target out the 50 EMA, 50 SMA for the resistance, and at least 1.5 risk reward ratio. In this particular example, if we were to come down and retest the 200 EMA, we'd kind of enter around 62,200. We'd put our stop loss at around 61,900, something to that effect, or 850, something around there, and our take profit will approximately approximately be around that 63,260. So we'll look at risk reward ratio around 3. Okay, so that's how my approach to this one. Would I go short? Would I go long? Not whilst we see this kind of level of candlestick pattern. To me, this looks like we are still likely to see that falling wedge play out a little bit more, and then I think we'll get support on the 200 EMA. Going short is going to be quite risky because there's not going to be great areas of support. If I were to go short here, for example, I would want to put that stop loss above that previous swing high and above the previous swing low, over at 63,531, and I would want to make sure it was above the 50 EMA here on the chart. The take profit would be on the 200 EMA, and this is going to fall just short of that 1.5 risk reward ratio. So it's not the most ideal. So I probably wouldn't be looking to go short. I'll be looking and waiting for the long opportunity on BTC, in my opinion, on the 1 hour time frame. Okay, so there's a lot going on. There's lots of volatility. There's lots of profits being taken. If we roll this up into a daily time frame, we can see here that that upper area of resistance still remains just that, an upper area of resistance. This is the range that we were thinking we were going to move up to before we kind of saw the retracement. Now, this was $65,000 to $66,000. We fell just short of this because we were 65,044 and we rallied up to 65,000 flat. Okay, so it's still that interesting range. On the daily time frame, we're just coming down to that previous swing high, coming in at that 62,745 that we broke on through. There is a huge fair value gap on the daily time frame right here that we've kind of entered into, and we'd have to come all the way down lower than the 50 EMA, 50 SMA towards $61,400 to completely fill it out. Equilibrium is sat down here as well on the daily time frame at 59,900 to the 61,062. So again, shows that there's an interesting range here as well to also find as potential support. We do remain in a bullish structure here on the daily time frame. That hasn't changed in my opinion. We're in a bearish structure, haven't changed. We've got the bullish structure on the smaller time frames. So we're waiting to see whether or not we get into a bullish structure. We still remain in our bearish one. Okay, so like I said before, this is a relief rally where we do have the ability to push up higher, but we've got to get through these resistances, which at the moment we can see that we're failing time and time again. Okay, so at the moment, yeah, we are kind of coming up to the resistances that we were talking about and that we were expecting, a little bit shorter than I was actually talking about, but resistance is there nonetheless. And we are, of course, still in the lower highs and lower lows on the daily time frame, in the bearish structure on smart money concepts, and currently in the middle of that fair value gap that was left behind when we broke out on the 23rd of August. Okay, so a few things in here that I am looking for. Obviously, if we break on down from here and we lose the kind of 50 EMA, 50 SMA, and we come down towards the $60,000 of the 200 EMA, and we lose that, then of course we're right on track for that next big move and the leg to the downside, where we are talking about $40,000 to $44,000. Okay, that's something that we've been talking about for a while, because that is a part of the plan of what I see going on within all of the liquidity extractions. Right, we pump up, liquidating the shorts, we drop down, liquidating the longs, liquidate the shorts, liquidate the longs, liquidate the shorts, liquidate the longs, shorts, longs, shorts, right? So the next move is liquidating the longs. Okay, a lot of people don't believe that you're going to be going down to these levels, and therefore you have to expect the unexpected. Now, looking at this, and there's no reason as to why we can't go down deeper. There's also no reason to actually go down deeper, okay? But ultimately, when I take a look at everything that's going on, I do think that momentum is going to be looking for a big reset, and we are going to be looking for these moves to the downside towards that $40,000 to $44,000 range, because that's where we're going to become oversold rather than overbought as we are on the daily time frame. Obviously, nothing is a guarantee, but it is an interesting thing to keep a close eye on. If we turn that off and bring on the relative strength index, you can see here that we are above the 50 level. This is a bullish territory to be in, and we can of course continue to rally on up from here. So it'll be interesting to see whether or not we kind of continue this upward trend or we get that reversal. The difference between the stochastic RSI and the relative strength index, the RSI, is that the stochastic RSI is more sensitive to price movements than the relative strength index, meaning that the relative strength index is great for a macro trend, But the stochastic RSI is great for being able to pinpoint where reversals are likely to occur within the market. The depth of those reversals, the stochastic RSI cannot help you with, but that's where you see things like smart money concepts and Elliott wave theory really coming into play, along with order blocks, liquidity, and all that kind of stuff. So from here, we can see that we have found rejection. We're hoping that we can rally up higher, but there's no guarantees. And we will be looking, in my opinion, in the kind of next month or so, a move down towards $44,000, in my opinion. That's where the value is going to be had. That is where I think we're likely to find great reversals and the next big pivot to the upside, where we find Bitcoin rallying up towards its new all-time highs of 6 figures. Okay, so this is just a pit stop ahead of what happens in 2025, which is one of the greatest and biggest bull markets in Bitcoin history, but also in crypto history, in my opinion. Now, guys, there's a lot of things to kind of think about, lots of things to kind of discuss within the community about where you think Bitcoin is heading. Let me know in the comments down below, or join us in our free Discord server linked in the description down below. We would love to hear from you and your thoughts about where you think Bitcoin is heading as well. And if you found this video useful, smash the like button. If you're new, subscribe. And if you haven't done so yet, check out my second channel just here, where I go through the Cardano technical analysis every single day.